Hello traders, the title of the video is how to scalping day trade like the Elliott wave theories. And this is the Elliott wave theories talking about the Dow Jones index and scalping trade using the Elliott wave principle. So as you can see my chart, I'm on a 3-minute time frame. Can you see that 3-minute time frame? Looking at the Dow Jones index, you can see that my chart is a little bit messy because of some scalping trade that I took today. But while I was scalping trade the Dow Jones, there was some Elliott wave price action here. This is what we're going to discuss now, so traders may be aware of it. So if you want to scalp trade using the Elliott wave principle, I hope you will enjoy this video. Okay, if you enjoy it, please let us know at the end of this tutorial by giving us the thumbs up. Okay, I'm removing some of the drawing on my chart. All right, this is it. Okay, so this afternoon or this morning in America, this afternoon in London, all right, we see this price action here. You can see market did open here, and the price just went up, boom, 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 and I say, please pull back, pull back. We know that the market is going to go up today, and we want to pull back. So they went above the long-term equilibrium price level at 26050. So we were expecting a pullback. No. The bullish traders are not in a mood at all to pull back. So they were pushing it up. And I said, where are they going? So, as I said to traders, the price does not go up for no reason. It's always headed to a specific target level. So, as I keep my eyes on the price action, this is about scalping trade, yeah, price going up, going up. Use the market principle in conjunction with the Elliott wave principle and then count the wave. So I'm going to show you what has happened. Here it is. All right, so then I'm looking at the price structure. You see how the price went up. So this is the first wave. All right, so following our Elliott wave count guidelines on the 3-minute time frame. Can you believe that? This is the first wave. Why? Because it's the first wave that will break above the consolidation. This is a nice setup. There was a lip, you see here. So yesterday the market was very bearish. The bearish trade dominated the market on the 12th of August 2019. And today we have this double bottom chart pattern here on the 3-minute time frame. And the bullish trader pushed the price above that consolidation. So the price, after forming this double bottom here on the 3-minute time frame, the price action now will breaks above the night or the neckline of the double bottom chart pattern after a downtrend. That's supposed to be the signature of the bull. We can label that the first wave right there on the 3-minute time frame. And the second wave was this one here. I miss this chart here. I need to mention that very fast. For those of you who are not following me at the Pro Trader YouTube channel, you are missing out because my live scalping trade will be posted, in fact, today at the Pro Traders YouTube channel. So I missed this chance to buy it here. Can you believe that? All right. I was a bit slow here to enter the trade because I could have placed order here. You see, that's the line I draw here when I was explaining that in that video, that I could have bought it here above this high here. After this pullback here, all I need to do is to place order to buy above the high, and I will be filled nicely. And the price was quite racy, very fast. Going back, so now we have here, can you see that? This is the third wave, very extended third wave on the 3-minute time frame. But you understand what I said to you? That no financial instrument will go up or down for no reason. It's always headed to a specific target level. I know that a lot of Elliott wave traders do not know that they should work with the Elliott wave principle. So as I see it running so fast like this, where are they going, these bullish traders? Why they are not giving us a chance to pull back, to give us a nice pullback? Now, the price was headed to this level. I'll show you in a minute. Okay, here. It was going in this zone. Was it the line I left there? There is a zone here. Yeah, that's where he was going, this zone. How do I know? Did you ask that question? Good. If you ask that question, that's a very interesting question because you see, yesterday, this is the yesterday price session, okay? I want you to understand this. All right. I went down from here to here yesterday. So the sweet spot zone, all right? Is that correct? The sweet spot zone, well, what did I put in? No. Is that correct? The sweet spot zone is the zone between the 50% and the 61.8% Fibonacci retracement level. What have I changed now? What has changed now? What has changed? The sweet spot zone. Okay, now I know what's happening here. So the sweet spot zone, the price was headed to this level. Okay, I'm going to go to the 4-hour time frame. I don't want this video to be too long. All right, stay with me, please. All right, here we are. So on the 11, is it 11 or 12? Okay, on the 12th of August 2019, traders that are following me at Day Pro Traders knew that I recorded a video, a very long video of 57 minutes, talking about live day trading, okay, the Dow Jones Index. All right, you remember that? Okay, so in that video, all right, we were looking at this price point. So we were talking about Fibonacci pattern. So price went up. Okay, that's an impulse move, and then it pulled back. We call it XA. All right, and I was telling trader that there is a high chance that the Dow Jones will form, okay, a Fibonacci pattern. Now, because of this retracement here in relation to this one here, you want to check out the latest video I posted at Day Pro Traders about live day trading, all right? So you may understand everything, all right? And so because of this retracement, we were thinking of either a bat pattern or a crab pattern. The pattern that is starting may not be completed. It may fail completely. The price may print something completely different. All right? Are you with me? So, and I was telling you that if we apply Fibonacci, this is what I did. So I didn't bring it all the way to the top there. I was applying Fibonacci. Here it is. No, I'll show you in a minute. So I was applying Fibonacci retracement to this price action. So I explained it to traders a day before. I hope it was. I left it here or something like that. Okay. Now, and I said that's the way we should draw it down if you want to. Okay, this is the move down. And I was saying to trader, I would prefer to put it somewhere here. Traders that have followed that are following me at all right. The pro traders know that was the reason, isn't it? So and the 50% Fibonacci retracement is here. So this is the line here. Okay. So if you look carefully, the price on the 4-hour time frame has formed a kind of a double bottom chart pattern with a higher low. Can you see that? So in order for the price to be truly bullish, it must go above the neckline, which is what I like to call the nut right there. Okay. So now, hold on, please. I'm trying to, because I don't want you to get confused. I'm looking for something. So today I was looking at the price action. Which was that? This one? Or? Okay. If I apply Fibonacci retracement, because I remember this zone, I left those lines here unless I move them there. But it's not coinciding with it anymore. I was wondering what's going on. All right, never mind. I don't want to waste time on it. Okay, so you can see here that the zone between the 50%, I think I put it wrong earlier on. The zone between the 50%, this is the 50%, and the 61.8% Fibonacci retracement, or this move from here down to here, It's in fact here. I think I made a mistake earlier on by putting it here. All right, that's the 61.8%. That's the 50% Fibonacci retracement level. All right. If the price, so now, because the bearish trader was selling before on the 12th of August, now the price is going up, okay? And we are counting wave, first wave, second wave, third wave, and fourth wave. And you may say, George, where is the fifth wave? All right. Now, the fifth wave is here. Okay, that's the fifth wave right there. Okay, so first wave, second wave, a little bit of pullback here, third wave all the way up there, fourth wave, very shallow, and then the fifth wave right there. All right, so as the price was going up here, breaking that consolidation zone and racing up, the first target from where it's starting from, the first wave, is which zone? It's the sweet spot zone. Do you know that? Here it is. If I went down from here to here on the 12, as it's going up, market principle, the ultimate target using Fibonacci retracement is the sweet spot zone between the 50% and the 61.8% level. Now, I told you that I missed a chance here to enter a bullish trend, and the price was going up. So as the price came here, I was watching the reaction of the price, thinking that, okay, there will be some sellers there, or the price will start pulling back, right? But the price did not pull back. You see that the next candlestick bar started from the high of this one here on the 3-minute time frame, and then it continued to go up. So where is the next target? The next target, talking about Fibonacci retracement, is in the zone between what? The 78.6% and the 88.6% level. So generally, a lot of Fibonacci traders will only talk about one sweet spot trading zone, which is the zone between the 50% and the 61.8% Fibonacci retracement level. But I told the traders, contrary to the general belief, there are other sweet spot trading zones talking about Fibonacci retracement. And the next one, which is the next target level, talking about market principle for this price move, is this zone here between the 78.6%, if I move this line a bit, to the 78.6%, all right, and the 88.6% Fibonacci retracement level, right there. So that's where you see that trending phase. You see that trending phase, 1, 2, 3, 4, 5. It did stop exactly at the target level. It's a target level, the zone between the 78.6% and the 88.6% level, because it didn't turn around here. So as I see that, I think that's where I sold it. When the price came here, somewhere here, I sold it. No, I sold it right. I think this one. I sold it. I think I sold it down here. When it reached that zone and I saw a weakness here, I sold it down here for a very handsome profit. All right. Okay. And I took a second trade. That second trade was a losing trade. I lost a 30 pip because of that. But that has nothing to do with the first trade that was handsomely paid. If you want to watch that video, you need to go to Day Pro Trader YouTube channel to understand what I'm saying. The title of that video will be Ray C Scalping Trading Strategy Dow Jones Index Live Scalping. Check it out at Day Pro Traders. All right, now you see we count 1, 2, 3, 4, 5 scalping trade. Now it pulled back a bit here. Can you see that? So what did I say to traders? Anytime we count 1, 2, 3, 4, 5, you want to apply the Fibonacci extension to which one? To the fifth wave. This is powerful. Because if the price continues to go up and it goes above the high of the fifth wave, we are watching which level? The 138.2% Fibonacci extension level of the price action, okay, of the fifth wave. That's what we do. So bear with me, please. So that's exactly what I did. So When we apply, now I'm going to apply Fibonacci extension to the fifth wave, okay? Oops. What? All right, that's not what I want to do. Yeah, so let's apply Fibonacci extension to this price move. All right, here it comes. And then we want to highlight the 138.2% Fibonacci extension level. You can see that the red line is exactly at that 138.2. If I move it a bit, you will see it now. Can you see that? See the 138.2% Fibonacci extension level on the fifth wave. And the price came exactly there and it stopped there. And I'm watching it. That's all. I'm just watching the reaction of the price there. And behold, I saw weaknesses. All right. I think I went back to the 1 minute time frame to sell it there. And that was it. And that was another excellent, beautiful, gorgeous bearish trade. So I took 3 trades, scalping trade. First one bearish, second one also bearish, third one also bearish at a specific price level. So I saw the first one at the top of the third wave. I think I tried to sell it again somewhere here, but the price just went up. So I took the third trade here. That was a handsome trade down. So now it becomes clear to us as a scalping Elliott wave day trader that we have first wave, second wave, third wave, fourth wave, fifth wave. Now this move that we see here is a flat correction. Now, I know what you are thinking. This is a speculative trade. This is what I say to traders. Anytime we are on the lower time frames, counting Elliott wave, and anytime we are on the 1 minute time frame, 3 minute time frame, 5 minute time frame, 15 minute time frame, even up to 1 hour time frame, usually when we are applying the Elliott wave principle or counting wave, all right, or trading like an Elliott wave theorist, that is in fact a speculative Elliott wave trading. So if you are new to our channel, or if you are new to the topic of speculative Elliott wave trading, please go to 24 Elliott Wave YouTube channel, or YouTube search the phrase speculative Elliott wave trading, and I think you'll see at least 2 or 3 videos, and you will hear me speaking in my beautiful Texas accent. You may disagree that this is not Texas accent, but that's the way I call it. It's my Texas accent. All right, so this to make you laugh a bit, okay? Make you laugh a bit. So we have a flat correction, right? Then I saw it down here nicely. Now, I could, here, you may say, Joe, why are you talking like this? Or you may say, this is a waste of time. But many traders will stop watching this video from this point onward. I say it's a mistake because tomorrow the market will open again and you want to know, you want to connect the dots. All right? So when we count 1, 2, 3, 4, 5, okay, so this 1, 2, 3, 4, 5 will become what? 1. So our expectation, okay, that's 1. I'm going to change the color into black, which I usually do. 1, 2, 3, 4, 5 will become another impulse wave of a higher degree. Let's see, we leave it 1. So this move here is a flat correction. Look carefully. So I draw this line today before I wrap it up, okay, for traders. When we were, I was live scalping. I stopped the video somewhere here and I draw that trend line for traders, okay. Now, so I was explaining to traders, okay, in that video, this is a flat correction, but the topic was not about a flat correction. When I was talking to them, the topic was about scalping trade, and I was telling them that one group of Elliott wave traders that are scalping trade on the 3-minute time frame will say that this is the first manual wave of the C manual wave of the flat correction, and this is the second manual wave. So you see that bounce up a bit there. Some Elliott wave scapular, we call it second manual wave, or the manual of the C manual wave or the flat correction, and then we call this one the third Mano wave, and they will call this one the fourth Mano wave, and they will call this one the fifth Mano wave. And at this point, those speculative Elliott wave traders that are using the Elliott wave on the lower time frame like this will be expecting a reversal here. So for them, look at this, for them, the flat correction has ended, and they will put here, what will they be putting here? They will be putting second wave of a higher degree, yes or no? That's what they will put there, but not in pink, but it will be in black, because the higher degree will be 2. So 1, 2, 3, 4, 5 become 2, and then this move down will become 2, second wave of a higher degree. And those Elliott wave traders will be looking for an opportunity to buy, and this is what they did here. So I did not buy here because I didn't like to buy there, all right? And I was telling trader, be careful because the price now breaking above the trend line. My expectation is that the Dow Jones slowly but gradually give us a nice pullback up to this zone. In fact, it can come here. So now, because of my drawing has changed into this zone. Because when I was talking to trader, my sweet spot zone was somewhere below here. So I think it was a mistake. So the sweet spot zone between the 50% and the 61.8% Fibonacci retracement of this move from here, where my cursor is down to this point, which is the trading section on the 12th of August. The sweet spot zone is here. So my expectation is that the C Mano wave or the flat correction gently bring the price into this zone. And if the common settler is broken and I receive a clean cut, okay, buy signal, I'll be willing to take it and buy it one more time. But it did not happen. So, and the video was also more than 1 hour, and I closed a section, the recording section, all right? But now, for somebody that wants to scalp trade on the 3-minute time frame, what you want to understand is that you do not just come on the 3-minute time frame and count wave. If you are doing that, it's a speculative trade. I'll bring you back to the 4-hour time frame. You will see that what I was saying to you, that we are expecting a Fibonacci pattern. I label this SA, traders that are following us at www.dayprotrading.com, know about the Gartley pattern, the butterfly pattern, the bat pattern, okay, and the crab pattern. And we are expecting either a bat pattern or a crab pattern if the pattern, okay, is being formed. Unless something else, the price is printing something completely different. So we'll be talking about A, B, C, D. So right now, that 1, 2, 3, 4, 5 that you see there brought the price to the nuts of this double bottom chart pattern. You see that? So it's a speculative Elliott wave count on the 3-minute time frame. All we have seen, there was an impulse move. That impulse move is this one here. Are you getting it now? Just there today, from this low, one candlestick bar brought it to the neckline. For the Dow Jones to be truly bullish, if the Dow Jones goes above, okay, that neckline somewhere in a zone of, I'll call it 26341, I'll call this green one, 26341, tomorrow, it goes above, it breaks above, deviate from it a bit, and then pull back nicely to retest it, giving us a clean car retest, and the common central line is broken, and we receive a clean car signal. That will be a nice time to buy the Dow Jones. Again, if the price breaks above the night and find a support or exhibit a higher low above that level that I just mentioned to you, all right, okay, where is the next target? You see, market principle again. Where is it going? What is the next target, my dear? So the next target will be in a zone of what? Between the 78.6%, are you listening? 78.6% and the 88.6% Fibonacci retracement of which price action? This XA. I recommend to traders that are trading the Dow Jones, if you are drawing a Fibonacci retracement, put it from this top here. I'm on the 4 hours time frame. Put it from this top here. That's how I feel about it, instead of all the way up there. Can you do that? On the 4 hour time frame, not 3 minute time frame, 4 hour time frame. Because I talk about other 78.6 and 88.6%, but that was on the 3 minute time frame. So don't get confused. I'm now talking about another 78.6% and 88.6%. This time we are on the 4 hour time frame. That will be somewhere in this zone. So if it breaks above that, if, do not assume anything. I'm speaking to new traders, all right? So some traders are more advanced. They say, George, move on, please. But I'm speaking, I do care about, okay, beginners also, all right? We don't want to be too selfish. Otherwise, I can record this video very fast and finish with it within 5 minutes, all right? So, and the new trader will mark the video down big time, all right? So, if you breaks above it and retest nicely, come on, set lines broken, and then PM. It doesn't mean that definitely it will come to the target, but if it starts going up or you see it, you want to know where is the price headed. You must ask that question every time. Where is the price headed? Is always going somewhere. So that target is between the 78.6% and the 88.6% level. If it goes above it, which it is possible it can go above it, it may not even stop there. It may just pierce through it. It could be racy, as I showed you before, on the 3 minute time frame. If it did the same thing, the next target after that is which one? You should know it, my friend. Yes, that's correct. The top here, the resistance, here, this top here are 273.76. If you fail to find a stop resistance here, all right. So if it reaches this zone, so first if it hit the 78.6% level, all right, traders who do not understand the Gartley pattern will be calling a Gartley pattern, but it's not a Gartley pattern, because the Gartley pattern, the AB should retrace the SA exactly at 61.8% Fibonacci retracement level. So it's not Gartley pattern. But if the price reaches the 78.6% level, you know, some people who are not expert of Fibonacci, we can mock them a bit, all right? We'll say that it's a Gartley pattern, so they will be taking a little bit of profit at 78.6% level. Now, other traders will say it's a bad pattern. So that's why we are selecting that zone between the 78.6% and the 88.6% zone there. If it breaks above it and find a support, boom, 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 let's target this one here. If it goes above this level, where is the next target? You want to know. You must know. You must know. If it goes above any high, the next target level is the 138.2% Fibonacci extension level of what? Because we are talking about Fibonacci pattern, and a lot of Fibonacci pattern traders are trading it, you will apply it like this. You see this price move down. You will draw the Fibonacci extension the other way around, because normally, I talked about this before to day pro traders. That's why I say to traders, if you're a subscriber of 24 Elliott Wave, subscribe to every channel that you see my name on it. Day pro traders, George Trio, 24 Forex trader, 24 stock trader, and so on and so on. All right. So, because we are talking about Fibonacci pattern, all right, you will apply it like this. So normally when we apply Fibonacci extension, it's like this. We draw it like this. All right. So the extension will be in the direction of the price, because the price going down, the extension should be further down. It's extending the down move. But the extension that I'm talking about, you will do it the other way around. So instead of applying the Fibonacci extension to the XA in the correct way, I want you to do it the other way, or upside down. So you do it like this. So your extension will be instead up there. So instead of talking about extension of SA, price going down, you apply it like if the price went up. So you'll be AS. So, and then you will highlight the 138.2% Fibonacci extension level of AS in this direction. So the extension will be on the other side. Okay. Now, I know what you are thinking. Okay. You can also Here we are talking about multi-talented trading, okay? Are you still watching? Good. One can apply the Fibonacci extension also to this last move. You remember when we were counting 1, 2, 3, 4, 5 on the 3-minute time frame? You see, this is an impulse move again, blah, 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 blah. Speculative. We're on the lower time frame, all right? Speculative. So when we are talking about speculative Elliott count, we are aware of the Elliott rules, but we are just using the rule as we please to make excellent decisions. 1, 2, 3, 4, 5, boom. All right? I talked about it before. Speculative Elliott count, okay? All right. So one can still apply the Fibonacci extension to this session only because that's the last leg. Should I say the last lap? Do you watch Formula One? All right. You know that it's Lewis, yeah? That's United Kingdom winning all the race now, isn't it? So, all right. I'm in London, so I can mock you a little bit, all right? If you watch Formula One, the last lap is so important. So, a Formula One driver can be ahead of everybody, but if the last lap is slowed down a bit, it can be overtaken by many drivers. So that's why we do care about any move that we see 1, 2, 3, 4, 5, blah, 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 all right? The last one there, you can apply Fibonacci extension to that. If you do not want to adopt the mindset of Fibonacci pattern traders, I am, okay, an advanced trader. You may disagree, you may bang the table, I am. Because understand that at this junction, it's better for me to switch in the mode of the Fibonacci trader because they are controlling the price. They are the one that were making all this noise here today. They were quite aggressive today. So they saw it like this, they say SA, they call this one AB, they see this pullback, they say BC between 38.2% and the 88.6% Fibonacci retracement of AB, and they were pushing it fast. In their mind, they want to bring it here, but nothing can stop the price to come back down here. The price can come back down here. You may say, John, where is that Fibonacci pattern? It didn't happen. Well, we are not going to create it. We are not going to invent it. We are not going to force it. So this is one thing you need to bear in mind, the Dow Jones. Now, another thing I mentioned to trader, where was that? Okay, because now I'm talking about Fibonacci, and I'm talking about Elliott wave, and I'm talking about 2-4 Elliott wave, and I'm talking about day pro traders. Now, look at this. Are you still watching? How long have I been talking to you now? That's 32 minutes. That's very good. If you are still watching, thank you for watching. It means that you are passionate about this. My apologies to traders, too many lines. I'll remove some of them tomorrow or day after tomorrow. Now, I recorded a video to traders at Day Pro Traders, and sometimes when you talk about some topic, it may take a while before trader will react or understand what you are trying to say, which is normal. And I see it many times. And I recorded a video about CCI inverted, how to trade a CCI inverted head and shoulder chart pattern like a pro. Check it out at Day Pro Traders. This is it. This is a very bullish CCI pattern. Here you form a double bottom, and later on the price went up. And I talk about it. This is another inverted head and shoulder chart pattern, and later on the price went up. The same signature we see here for the CCI. And in that video, I show trader how to trade it. It's not about just buy and cross your fingers, your hair, your mustache, okay, your beard and everything, hoping that everything went well. Okay, I hope you found that one funny. Okay, we want to use a top-down trading method and trade it. It's just the CCI giving us a warning that there is a possibility that the Dow Jones will push it up more. Okay, that's true. Now, but the price need to confirm it. So if it doesn't confirm it, well, this is just a false warning or false alarm, so to speak. Okay, so I'll talk about this, isn't it? So this is the reaction that we are seeing now on the 4-hour time frame. This is the warning that the CCI has given us. So I took that one warning. All right. So you hear the alarm, the fire alarm. What do you go? You go to the assembly point. You don't even question. You are in a building. The fire alarm is ringing. Where do you go? You go to the assembly point. You ask somebody. There will be somebody they call fire. How do you call them? Fire agent or fire whatever. All right? and they will tell you where to go, and you go. So you go to a building, you have to know the fire evacuation. Okay, now this is another thing. I know that because I do care about safety and risk. Now, here it is. Now, I need to say to traders that I have been sick, all right, so I'm glad that I can get up and sit and record videos slowly for you guys like this, and hopefully I'll get back on my feet, all right. So, so this is the reaction here. I get it now. So you get a message. So, don't we count that 1, 2, 3, 4, 5 is just a speculative move to bring the price to the neckline. So, the price we can see. So, you see, we are if that Fibonacci pattern continue until it reaches point D here, or even continue more up to this point, or even go into 138.2 per level, or even to 161.8 per level. All right, the Dow Jones can continue to go up more. That 1, 2, 3, 4, 5 becomes 1. And then we will find the second wave of a higher degree. So you see, we are using 4-hour time frame and 3-minute time frame. Sometimes they say, John, that's exactly what I want you to do all the time. That's a speculative area. So 1, 2, 3, 4, 5 becomes 1. So tomorrow, tomorrow is what? The 14th of August. Okay, 14th of August, 2019. The expectation is that the Dow Jones come back in this zone. That would be great. But one thing I need to mention before we wrap it up is that so a day has closed now. So we have today, and the market still at this. Tomorrow is completely a new day. The prime may not tomorrow. The prime may not follow what has happened today. It may not continue what we are seeing here. Tomorrow the price can gap down all the way here, and you may say, and then continue to go down more. You may say, George, what were you talking about? So I want you to bear in mind that though there could be a continuation of what we have seen today in the shape of a wave count, tomorrow can be a different day. And from that point onward, we need to adjust accordingly again. So don't get carried away, though everything looks so tidy and nice. So you may be hoping that tomorrow it came here and then you buy and the price say no and continue to go down. Just flow with the price and don't fight it. So is this 1, 2, 3, 4, 5? Do you agree to that? As the C minor wave of that tiny speculative flat correction, expanded flat correction. Personally, I did not accept that. Okay, I did not accept that. Why? Because of this. I'll show you. I did not accept it. Because this rally up, you can see that this is why you see sometimes the in your way professional are very demanding sometimes. So they see like this, they say, doesn't look clean. So they don't like it. So they say, it looks like it, but they say it doesn't look clean. So they will print another one. So that's why I was reluctant to flow with these people here and buy here. I didn't like it. So there are other area way traders that will say, first minor wave of that C minor wave of the flat correction. You get it now? And then they will say, this is the third minor wave of the C minor wave of the flat correction. So you can see that the market went into the gap period and the price just went horizontal. You can see there. Now this move here, we can cover it like it did not happen. It's just blah, 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 blah. Because the bullish trader did not want the price to go down more. Why? The price went down yesterday on the 12th. So on the 12th of August, the bearish traders were enjoying themselves, selling like a mad people all over the place. They crashed through the long-term equilibrium price level at 26050, all right, without even blinking, all right. So today, the bullish traders were taking their revenge. So they did not want the bearish trader to mess it up again. So they want the market to close up. So as they managed to close that gap, so they brought it back to the starting point. Normally, bullish traders should take some profit and the price should come into this zone. But they were not in a mood at all to help the bearish trader in any way because they are afraid that the market will come back down again. So because of that, they were fighting the bullish, they were fighting the bearish traders that were trying to sell here. So in my view, talking about our flat correction, in an orderly manner, normally the price should have done something like this. You see, should have done something like this. So 1, 2, 3, 4, 5 here. Now it went horizontal. So tomorrow, is he going to come here? So it will be even nicer if they come a little bit below this zone. Why? Because by going below it, it's like they are testing it. Okay, they are testing the foundation. All right, dip a little bit below here, and then quickly start going up. That will be even better. Right. Doesn't mean that when he did that, you just jump on it and buy and say, George, I trust you. Don't trust me. Don't trust me at all. Don't trust me. Okay. Use the common sense line. That's what I'm saying. So will he do that tomorrow? We will see. So if he did that, then we'll put our second wave here. Or tomorrow, he will just gap down. You say, what's going on? Or from here, he will just gap up. If he gap up on a 3-minute time frame, okay, you can still again. I talk about it today, pro-traded. Any last move again, this one. If you gap up, it go on above this high, you can apply again Fibonacci extension to this last leg, last lap, Formula 1. You remember that? You can apply Fibonacci extension to that again to watch that 138.2% level again. And apart from that, remember that everything that we are discussing on the 3-minute time frame, if you are somebody who do care about multiple time frame trading method, somebody who does not want to repeat the same trading mistake, you will connect it with another higher time frame. So all I was doing on the 3-minute time frame has something to do with what is happening on the 4-hour time frame, and I'm aware of this nut here, this resistance zone on the 4-hour time frame. All right, so don't be fixated on the 3-minute time frame. Come back to the 4-hour time frame as I told you already. So this will conclude our long discussion, very long discussion about how to scalping day trade like the Elliott wave theories. So I think because of the way I'm feeling now, I'm speaking a bit very, very slowly. My apologies to traders. My intention was to keep it under 10 minutes, but here we are, 42 minutes. All right. All right. Some traders we watch in full, those that are very, very passionate about Elliott wave. All right. So thank you for watching. If this video has been useful to you, please let us know by giving us your beautiful thumbs up. If you dislike it, be sure to mark it down. If you think that George, blah, 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 mark it down, okay? However, if you think that George, are you kidding me? Very interesting video. I like it so much. Feel free to share it with your friend on the social media. And I always say to those traders, thank you very much for sharing our video. Subscribe to our YouTube channel. Our YouTube channel is 24 Elliott Wave. Digit 2, digit 4, Elliott Waves in plural. Be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. So this will conclude our discussion today about how to scalping day trade like the Elliott wave theory. Happy trading to you all, and I will speak to you soon. Thank you for watching.